Thanks to our friends at The Motley Fool for sponsoring this video. Check out the link below, fool.com/The Smattering, to get access to the 10 best stocks to buy right now. Hey, Jeff, who's your favorite investor?
Warren Buffett, of course.
Yeah, you're probably lying, but let's be honest. Whether Warren Buffett is actually Jeff's favorite investor or not, he's an absolute legend and he's one of the best investors ever. The vast majority of his worth is in Berkshire Hathaway stock. Berkshire is worth over $700 billion at recent prices. Now, one of the cool things, though, is because Berkshire has that massive stock portfolio worth almost $300 billion at recent prices. That means Buffett actually has a lot of his wealth tied to other companies. I'm Jason Hall. This is The Smattering. And Jeff Santoro and I are going to talk about the 5 stocks in the Berkshire portfolio that make up almost 1/3 of Warren Buffett's total worth. All right, the first one, this is the big one. I think most people know about it. This is Apple. Of course, Apple, one of the most valuable companies on earth, one of the most profitable companies at recent prices, worth about $124 billion. By far the largest stock in Berkshire's portfolio, $31 billion cost basis. So you see, number one, that's about a 4-bagger. That's an incredible return for Berkshire so far. But it's also one of the largest cost basis investments Berkshire has ever made that wasn't in a company that it wholly acquired. And it's more than double the number 2, which we'll discuss next.
Yeah, and it's interesting that it's commonly known that it was actually one of Warren Buffett's lieutenants at Berkshire Hathaway that made the initial investment in Apple. But in the time since that happened, Buffett's been effusive in his praise of both the company and CEO Tim Cook. So it just goes to show you that even when someone within the Berkshire family who's not Buffett makes a stock purchase, Buffett knows about the company, he's learned about it, and he's on board with that decision.
Jeff, let's talk about the number 2 company here. And this has become Buffett's favorite bank, and that's Bank of America. Some things about Bank of America that are really attractive. It has one of the largest low-cost deposit bases in the banking industry. There's a lot of people that have there's billions of dollars that a lot of people have deposited at Bank of America that they seem happy or at least resigned to get far lower yields than they would at just about any other bank. For a bank, that's a really big competitive advantage because it means the rate that it issues on loans and that it's able to earn is far higher than what it has to pay out in depositors. Jeff?
It's interesting, there are dozens of Buffett quotes out there, but he's talked a lot about leadership and making deals with people that you can trust. I think it's notable that now it's Bank of America that is his favorite bank, but it wasn't that long ago that he had a large position in Wells Fargo, and they finally just completely exited that in 2022. So it makes sense that Bank of America is there now, and it also makes sense that Buffett stepped away from Wells Fargo.
You can lose money, and that's okay. But if you lose our credibility, that's another issue. Let's talk about the number 3 holding in the Berkshire portfolio. And it looks like it's become Buffett's favorite energy company. And surprised it's not Occidental Petroleum, it's Chevron, the second largest super major. The investment's worth about $24 billion at recent prices. Chevron's turned into an absolute cash cow. It has some of the lowest production costs of any of the large oil and gas producers, around $40 a barrel. It's also very diverse, and it's existed through all kinds of cycles and been a productive, profitable company. It's raised its dividend 35 years in a row. It's a member of the Dow Jones Industrials, one of the strongest energy companies on earth, Jeff. And we know that dividend, the growth of the dividend, that cash flow strength, those are all things that Buffett loves.
And Buffett is, he's a pragmatic investor and looks at the world the way it is, not necessarily the way it could or should be. And, the shift to renewable energy is probably inevitable and it's necessary, but in the meantime, we're going to still rely on fossil fuels. That's the reality of right now. And until that changes, Buffett's going to reap the benefits of these strong companies.
Up next is Coca-Cola. This is a name that's become pretty synonymous with Warren Buffett and investing. The company invested about $1.3 billion in its stake, and that stake is worth over $22 billion. We're talking almost a tenfold return. And that's just in the stock price. Jeff, one of the most amazing things to me about this investment is that at the recent dividend, the most recent dividend, Coke pays Berkshire Hathaway about $700 million a year. What that means is that Berkshire gets back its entire purchase price every 2 years just in dividends. And that's just so amazing to me.
And it also it brings up another one of Buffett's sort of like favorite things with investments, and that's brand, right? You know, we talked about Apple earlier. That's obviously a strong brand, but Coca-Cola is one of the most recognizable brands, if not the most recognizable brand around the globe. And, you know, Coke is able to earn a premium price and get good margins on a product that's pretty cheap to make, and it's driven by that brand power.
Another huge winner that has a lot of brand power is the number 5 stock in the Berkshire portfolio, and that's American Express, a widely recognized brand around the world. It's associated with wealth. It's associated with high quality living. $1.3 billion investment, similar to the amount that was paid to buy Coca-Cola shares, worth a little over $20 billion at recent prices. Another dividend cash cow, generates more than $300 million in dividends a year.
And American Express is probably more resistant to recession than many other banks and credit card companies because its customers tend to be a little bit more high wealth, less likely to miss a payment. And, you know, but at the same time, they're also growing its young customer base by having appealing awards programs and making it which makes it a compelling growth stock as well.
Hey, Jeff, how about we give the folks a bonus stock?
Let's do it. One more.
This is Moody's. This is one of my favorite stocks in the Berkshire portfolio because I think it is so emblematic of the power of long-term compounding. Now, this is far smaller than so many of those other positions. It's worth about $6 billion. The Berkshire stake is worth about $6 billion. But get this, Jeff, Berkshire paid less than $250 million for what's now worth over $6 billion. That's a 24-bagger just for the stock price.
Buffett gets a lot of credit for making smart investment decisions, but you don't hear about Moody's that much, but that's an incredible return. This is the other thing that kind of astounded me as we were looking into this. So Moody's pays a 70-cent quarterly dividend, which if you do the math means it pays Berkshire back its cost basis just in dividends every 3.5 years. So this has just been a massive winner for the company.